All right, folks. Unfortunately, there's a new theme that's emerged in this market. I'm calling it the crash of the Titans. NVIDIA yesterday, we know, is down almost 10%, but the more newsworthy part of that was about $280 billion in loss, by far the most significant one-day decline of any individual stock in market history. Goldman pointing out there's several factors for these current struggles. They talk about the earnings, the related supply issue that we talked about, seasonality, negative seasonality for chips, reports of OpenAI maybe developing an in-house chip, portfolio managers reshuffling the books, also reports, of course, of that DOJ subpoena related to antitrust. But I think the most significant issue for this stock is what I just read and all of that kind of stuff. I call it noise. It's overwhelming investors. Joining me now, Rob Luna, Wealth Academy founder. Rob Luna. Rob, I do think it's ironic that the stock fetched a gazillion upgrades after they reported last week. You see those yellow dots up there, folks? So Wall Street's saying, hey, we like it even more, but it's been under nonstop pressure since then. What do you make of it, and would you be a buyer?
Yeah, I think it's market sentiment. I mean, you were talking about, the efficient market hypothesis, and I think that noise was taken out a long time ago. Markets are not efficient. They're very driven by emotion, and I think that's what we're seeing right now. And I think this election that's coming up, Charles, until we get some further clarity around that, there's people that are going to be very, very scared to step in and make a big commitment to a stock that's ran up as much as NVIDIA. Yeah, it's down 22, 23%, but we've seen this before with some of these high flyers. I wouldn't be touching NVIDIA till it's down 30, 40%. If you own it longer term, I think you're going to be fine, but I wouldn't be putting new money to work in a name like NVIDIA right here.
And I do know there's some other big tech names that have been under some pressure that are on your radar, right? CrowdStrike, Palo Alto, Amazon. Yep. It seems like maybe, there's a conflict, right? We know the fundamentals of those companies are amazing. We know that cybersecurity needs are just going to grow exponentially. So you're holding off mostly because of sentiment of the market?
Yeah, I mean, exactly, Charles. I think, look, all of those names have had a big run up, and I'm an eternal optimist. I've been bullish on technology stocks for 2-3 years. I turned a lot more cautious about 2 months ago. And I just think for most people, if this is in your IRA, it's put away 10 to 15 years, don't worry. But I think it's a bit reckless for me to tell people who are sitting in cash to start buying these stocks if they're going to need that money in the next 6 to 12 months, because I think this election, who knows what's going to happen. There's going to be a lot of noise, and I think there's going to be a lot more volatility. I don't think a bottom is going to be found in these names in the next 60 days.
Rob, I know you're a value investor. I was reading an article over the weekend, and essentially he's asking if Warren Buffett has lost his touch, right? We know he's sitting in hundreds of billions of dollars in cash. He's missed some big moves. Just your thoughts, because the last time that Warren Buffett was questioned like this was around 1999, 2000, right? Warren Buffett doesn't have any of these hot stocks, and it turned out maybe we should have been listening to Uncle Warren after all.
That's exactly it. I can't tell you how many times I've heard that Warren Buffett has lost his touch. Look, Warren's a long-term investor. His track record speaks for itself. And like you said, 1999 was the last time he had this big of a cash pile. And if you take a look at that market, that was a point in time where we saw tech stocks ran just like we have with NVIDIA, astronomical numbers over the previous 10 years. But for that following 10 years, they did absolutely zero. And there are 10-year periods, Charles, where technology stocks don't do as well. And if you look at these dividend growth stocks, these value stocks, they have underperformed for a very, very long period of time. I do think, and not a lot of people are saying this, that those stocks are going to get the baton here and take the lead probably for the next 12 to 24 months.
And we do have 3 names that I know that you're looking at based on value valuation: Verizon, Dominion, and CVX. Let me just ask you about Chevron. Yep. Crude oil breaking down to a 2024 low. I think that's all about the economy, China's more specifically, but maybe even ours, gasoline demand going down. Do you still hold a stock like that because of the dividend?
Yeah, look, I think valuations on Chevron are reflecting a lot of that. Can you get another 5 to 10% downside? Absolutely. But you're getting a 4.5% dividend. We know tax rates on dividends, at least as of right now, are very favorable. So I think as interest rates have peaked, I think we all believe that people are going to start going to some of these names where they could pull some income from. And I think Chevron's probably your safest play in the oil patch there.
All right, good stuff, my man. Rob, we'll talk to you again real soon.
Yeah, thanks, Charles.